analysis so we could help you and make you understand what's going on in the market and actually give you as much knowledge as we can, as much we have to give to you actually. So I'm here today to have a quick right understanding of what's going on in the market. So what happened with the ECB, where we are standing right now. So together we're going to have a quick briefing of what's going on. See the announcement from ECB. Okay, it's already out actually, but we need to have a look on what's going on. So let me just make sure that you can hear me loud and clear, because I'm not quite sure about it yet. It seems that, okay, I can see that I'm live in Facebook, and that's perfect. So Facebook works. Hopefully YouTube works as well. Okay, let's hope they help. My fellows, my colleagues will have a look, and let's hope that you can see me in the Facebook, in the YouTube page as well. Fingers crossed. So, okay, as I was saying, we're going to have a discussion about ECB today, and actually the theme of the day is pretty much euro and pound. It's pretty much the attention, the eyes are solely on euro and also on pound due to the deadlock in the Brexit, and also, and actually this is the main theme of the day, but also the ECB, which actually is taking this is in the spotlight right now. So let me I just want to make sure with my colleagues that that everything works properly, because there is like sometimes we're facing a lot of problems with the social media. And as I heard earlier today, Facebook is like stuck or stuck like in Europe, in whole Europe earlier. So that's why I'm worried a bit. I heard that Facebook actually fell in simple terms, because of the traffic, a lot of traffic, so it's stuck in Europe. So let's hope that you can hear me loud and clear. Okay, perfect. Stuart is like ensure me that I am live in both channels, so we can start actually. Can't wait for your questions. Okay, I'm here to help, as I said, so stick your question below the Facebook and YouTube live. I will have a look at them, and I will reply to your question like right now during the live. Okay, so don't hesitate to put your comments below the live analysis, guys. Okay, so okay, quick briefing. What happened? So as expected, we have seen ECB having its interest rate earlier. So actually in line with expectations, right? We didn't expect any change to the interest rate, so they held the interest rate at negative territory, 0.5%. Let me share with you also the calendar, the economic calendar, as I always do actually. Here it is. So we've seen that they, and I'm not sharing, here we are, okay, perfect. So let me hide the caption as well. So ECB, as expected, held rates unchanged, but that wasn't actually that wasn't the driver of the market. The driver of the market is and will be, because right now Ms. Lagarde is having a press conference, is the ECB meeting and what they have to say, but also the statement. So, as it was expected, let me get rid of the calendar, and let me get back my screen again. Perfect. So let me have a quick briefing. as I'm talking to you. So as I was saying, the interest rate was pretty much as expected. What we aim to see and we're really interested to see today is what will happen with the rescue programs, with the so-called PPP and TLTROs program from ECB. Actually, the expectations were that it will be strengthened, and this is what actually happened. So actually, ECB finally, in its statement, confirmed that they will extend the PPP program. You know, the PPP program is a measure, is a tool, to support the economy. It's a immediate, it's a crisis tool, a crisis measure. So the ECB confirmed today that they will extend the PPP program at least by March 2020. So a somewhat longer extension than what was expected from the markets, and that's why we have seen further support of euro on that announcement. So euro actually against nearly every single other asset was appreciated even further on the confirmation that the PPP will help until March 2022. The expectations, if I'm not mistaken, was like for June next year, so just a year expectation. But now they have we have a full confirmation that they will keep it for nearly 2 years. That's why we've seen a lot of demand on euro on that announcement. It is clear though that there is and there will be pressure on the ECB, right? So there will be pressure because we haven't reached the pre-pandemic levels in economic perspective. Virus is still here, even though the vaccination program started, but the data is what matters, okay? And the data are a bit mixed and more to slow recovery and far away from what we've been like pre-pandemic. So the focus now turns away, since they have already confirmed that they will continue continue the PPP. The focus turns now away from the immediate crisis measures, but more or less to the huge debt mountain. And if you follow us and if you reading our articles and our posts, we had several articles explaining why the huge debt that euro is having right now, not only euro, also US, but we have discussed several times about euro. The huge debt, especially for banks, a huge debt has been accumulated in the process of dealing with the pandemic. And now this is the key. This is key about ECB. So PPP is out of the way. So our focus in regards to the future of Eurozone, the future of European economy, the future of euro will depend mainly, not solely, mainly on how the ECB will handle the huge debt. So that's why Lagarde is speaking right now. Let me also have a look whether we have any outcome from there, because any hint from her in regards to the debt will be crucial. Okay, so other than that, ECB also confirmed that reinvestments have been extended until the end of 2023. So for governments like, example, Italy, they have suffered the most. Spain. That means that it will take a long time before the extremely high debt burden is becoming a real problem. So that's quite good for the economies, the European economies, that they are like in a really serious situation. So the increase of PPP program, something that I missed telling you, was actually so far 500 billion euros. Okay, and if I'm not mistaken, now it has actually it has actually they have actually expanded it by another 500 billion euros, which is in line with expectations. This is what the markets expected. At the same time, the ECB said that inflation convergence has to be reflected across the board, so in every single country in the European Union. So this is another signal that any tightening, okay, is a very, very long way off. Okay, on top of the expansion of PPP, there was also a strengthening, as was expected, of TLTRO's program, which now allows borrowing of up to 55% of eligible loans. So let's summarize a bit before we move to the MT4. Okay, there is not a huge addition to the stimulus measures. Okay, in line, interest rates in line with expectations, strengthening of PPP and TLTROs was expected, but the good news is that it will be until March 2022. But what we should really keep from this statement is that there is a clear signal that this will remain in place for a long, long time. So we might remain even into the negative interest rates. A strengthening of the low for longer message from the statement actually it was actually that the ECB figures, and I'm referring also to the bonds, the eurozone bonds, have actually seen hitting all-time lows ahead of the ECB meeting. So if I just bring, let me quickly bring my MT4 in, I will show you exactly what I mean. And come on. So exactly after that, okay. I don't see any questions, unfortunately. So here I have the Euro bond, which actually the European bond, the future of European bond actually drifted. I cannot really zoom in it further, but dipped on the ECB announcement, on the ECB statement. Okay, so that was actually reflection that European bond yields hit all-time lows ahead of the ECB. So we've seen since morning the European bonds falling and falling due to the anticipation of ECB, and as the investors and the market participants were actually betting on further asset purchases and another round of cheap loans for bank. And this is actually what happened as well. So the Italian, Spanish, Portuguese yields, all, if you are like watching this kind of yields, yields, you can see that they all sank to their lowest on record. Okay, this is because market participants were really put into the depth. Okay, so expecting that the expansion of the bond buying programs, and that's why they have really shortening the yields. Okay, so let me actually move on to the okay. Let me double check what's going on with Ms. Lagarde, and I will shift to Euro, which has seen a lot of appreciation today, not solely for the ECB, but also for due to the Brexit headlines, and as I wrote just earlier, due to the deadlock between the UK and EU, and that confusion whether they will they will shift the deadline on Sunday or 80th of December. A lot of confusion. The UK government stating that there's a huge gap remains. So all that waited on the pound but supported the euro, but more or less it was the ECB. So before I start the technical analysis in euro dollar, I would just quickly have a look on Ms. Lagarde's Ms. Lagarde's statements, because she's actually live right now. So unfortunately, because we're remote, I don't have my Bloomberg TV over here. So just looking the news feed. So here we are. Okay, so Ms. Lagarde, actually, as I'm watching over here in my news feed, she said that the PP program doesn't have to be used in full, but can be topped up. So that's clear signs that they might continue to add, to extend. So until March 2022, in between of now and March 2002, they will top up further the PPP program. So more signs that the measures that are announced today are a compromise between the hawkish and the dovish camp at the ECB, because from the one side, Lagarde is saying that PP doesn't have to be used in full. From the other side, she also stating that, she's stating that they could also be topped up. So that's like it's a clear sign that there is a bit of a fight in the ECB between hawkish and dovish. I would really like to know whether you can hear me over here. I feel very lonely. So yeah, you can. Perfect. So okay, so as I was saying, according to Ms. Lagarde, we've got this division within the ECB, a lot of hawkish and a dovish situation. One that doesn't satisfy markets, although it will have been a mistake to base today's decision on negative downside risks that won't necessarily materialize, especially in view of the fact that there is also the chance of a quicker, stronger than expected rebound if there is a Brexit deal and when vaccination go ahead as planned, and will help to revive the service sector. But in any case, it could well be that reinvestments will be pushed out even further into the future to create even more breathing space for governments with high debt levels, such as we mentioned, Italy. Okay, so the strengthening, according to Ms. Lagarde, of the TLTRO program was aiming to keep the credit together with the EU's pandemic support program, which is likely to be signed off actually this week. So another thing that you should have in mind is the sign of the United EU pandemic support, which will keep the companies all over Europe supported. Okay, ECB's Lagarde stating that is watching exchange rates carefully. That was pretty much as expected. We were really expecting something from here to mention a bit about euro, and she's doing that with this way. So she says that in her reference to the strength of the euro, they are pretty much stuck to the formula from last month, saying that they keep an eye on the exchange rate, how the other currencies are developing and the associated impact on the inflation output in order to figure out their next step. Okay, so that was so far. I will keep an eye on what's going on with Ms. Lagarde because she's still speaking. But until I do that, because that will take time, let's go back to our markets and see what's going on. So over here, euro dollar bounce higher today. Actually, it was having some kind of a floor over here at 120.80, but it bounced higher on the as we were getting close to the ECB. Okay, bounced higher, broke the 121 and actually retested the first resistance of the day, and it get back to nearly recovering the 50%. Can you see that? The 50% of the dip that we've seen the last 4 days. So clearly back. So something that states that that slight pullback was just a correction before the euro dollar moves further to the upside. And I would like to add something on that. But before I do that, you should keep an eye also on the momentum indicators. So how can I? Okay, my MACD over here, as you can see, it's like it remains in the positive territory. Slow down a bit due to the correction that we have seen the last few days, but remains strong, well above zero, pointing further to the upside. So positive bias remains, and the same situation stands for the RSI over here. And you should have this line on. You can see higher lows, higher lows, higher lows, and there is further steam to the upside. There is further area to be covered in RSI. That is still pointing further to the upside despite this slowdown and this pullback in daily chart. Now, in the 1 hour chart, it broke. You can see that we have a big candle over here that closed above the previous fractal, saying that bulls are actually entering the market. So the key will be see how this level, this candle will close. Let me get rid of the Fibonacci so we'll have a clearer picture. The fast MAs are pushing further to the upside, pointing to the upside. So there is, and MACD actually turned positive even though the signal line is still below zero. And let's have a quick look on stochastics and parabolic SAR. So, okay, my stochastic over here is a bit flattened. Okay, it's a bit flattened, but the overall picture is positive in the intraday because parabolic SAR remain well below the asset, stating that there is further steam to the upside. MACD turned positive even though it's a bit like it's close to neutral. RSI is pointing to the upside. So this mixed situation over here is telling us that there is some steam to the upside, but limited one, okay, at least for the 1 hour chart. As I already said, for the daily chart, things are good for euro dollar, and more further steam to the upside is expected. And why is that? Oh, sorry, what have I done? So, and why is that? You need to consider that it's euro dollar. So it is not solely what's going on in the Eurozone, but also is what happens to the US. Okay, so in general, there is a lot of bullish sentiment for euro dollar because we have seen that as we're going into the year end, there is a more risk cautious reaction from the markets that they held some kind of a bull trend in global asset markets and downtrend in dollar. Okay, but the fact that we have really compare like a really high inflation rate in US, which if we compare it with euro, it's very high. So higher inflation rate in US in comparison with eurozone or any other major economies. So this is the one point. Also, given the significance of lower real interest rates in the United States, okay, uh, this is something that keeps euro dollar bullish as we going into the end of 2020, but also as we go into the 2021. So this is because the bullish euro dollar is on the proviso that global asset markets remain in a bull trend, as I said, which looks likely due to the mixed fiscal stimulus, the prospect of vaccine assisted return, as the return of the economic normality at some point, the benign consumer demand in major economies, the low interest rates in comparison with US. So all these, along with the asymmetry between the richly valued US stock markets versus the comparatively lower price markets in euro and in other economies as well, especially the emerging ones, generate a lot of outflow out of the dollar. Okay, that's why the other currencies are actually benefiting against dollar, because all this situation, the fiscal stimulus, the high interest, the high inflation rates, the the low for longer situation, the asymmetry in the policies, the central bank's policy. It's something that, and the bull market in the US stocks is something that that generates a lot of outflow out of the US dollar. That's why, as long as the Fed's inflation policy is rubric, and as long as they keep US real interest rates on a loosening path, we expect a dollar negative, to be dollar negative. That's why euro dollar is expected to continue further to the upside as we go into the 2021. No questions in Facebook. No questions. Hi guys, hi. Thank you for watching. So no questions in Facebook. No questions in YouTube. Okay. You might went already to holidays. I don't know what to say. So let's move on. Let's see FTSE. So FTSE. Okay, other than ECB, which we already have a look as well. So FTSE. So today actually we had a lot of a depreciation of pound. Sorry, I need to drink a bit. Okay, warmer and warmer. Okay, so as I was telling you, we had a lot of pressure on pound today. Okay, a lot of pressure on pound, and that was, as expected, driven by Brexit. We reached a deadlock. We reached a deadlock, and all this, the last 3 hours actually, there were some lively and interesting talks between UK Johnson and the European Commission President Ms. von der Leyen, and the chief negotiations, of course, since last night. But once again, they failed to find a way around they found significant obstacles, and as Johnson mentioned, actually the UK government mentioned, they finished those talks today by saying that there are huge gap. The huge gap remains. So talks will continue, of course, okay? And there is a new deadline for Sunday. However, there were some officials like Mr. Foreign Secretary Raab from UK saying that actually Sunday might not be the deadline. They might extend it even beyond then. Also, I've seen somewhere December 80th. That was earlier. I think was from Mr. From who was it? I see somewhere the 80th. I think. Let me double. Yeah, it was from Euronews. So we're not sure how reliable this will be, but they also mentioned that a possible deadline will be the next Friday, December 80th. So this is what we've seen. This is what actually this all these lively talks that we've seen from the EU UK front is something that weighed significantly on the pound today. We had a lot of pressure on pound today. Okay, so significant obstacles. Talks will continue until Sunday, so we will have further news in Sunday. But it's definitely the demand for the fishing access that remains the key rule in order the UK to actually finally reach to a deal with EU. So the European Commission earlier published a very narrow no-deal contingency plan to maintain basic transport and functioning borders in case that we have no deal. So that's also something that weighted on the pound. So the announcement that the European Commission is actually proposing a contingency plan to get prepared for a no-deal Brexit, weighted further on the pound, and these measures include basic air connectivity, aviation safety, road connectivity, and a portion of fisheries, even though fisheries, as we already said, is something that is the key barrier for a deal. So a lot of depreciation of pounds so far today, against euro, against dollar, against Aussie, New Zealand, and so on and so forth. So pound, let me put the daily chart. You can see how huge this candle is. So dipped 132.70, 132.70, breaking the previous two fractals, double fractal, double bottom, triple bottom actually over here at 132.80 that I had, which also coincides with the second support of the day, broke that, and actually this is also the reversion of more than 30% of the gains that we have seen since the end of September. So breaking as well the 20-day moving average, entering into the lower Bollinger. So the next real support for pound is this week, or even today, is the 31.80, so the lower Bollinger Band pattern, or 132, 131.80 is the support area to be seen for cable, because it's the third resistance of the day, which coincides with the 38.2 Fibonacci, coinciding with the latest fractal, but also the lower Bollinger band in the daily chart. So a key support area to be seen if the asset continues further to the downside. You can see that MACD have slowed down a bit in the daily chart, so turn slightly lower, but there is no confirmation yet. It's just a slowdown, explaining this pullback. RSI crossed 50 just now and pointing to the downside, so sellers dominate the market, the cable today. In the 1 hour chart, a lot of selling pressure, MACD remains well below zero. RSI flirting with 30 barrier, with the oversold barrier. And as we can see from the fast moving average over here, there is further steam to the downside for cable. Let's move on. No questions? That's a shame. Never mind. So, okay. So, let's move on. I will try to cover the key, sorry, I'm running out of steam a bit. The key assets. So dollar yen over here, slightly higher the last few days. Moves above the 20-day moving average today, but as I repeatedly saying, remains in a low for longer downtrend since for many months now. So it's just all this actually up and down all the time. It's just, can you see that satisfies better my perfect. So you see that up down within a downward trend. So right now it had rebounded the last 2 weeks above the midline of my channel, moving to the upside. So the next key area to be seen will be these two fractals over here, 104.75, and if that breaks, actually this is also coincides with the upper line of my trend. So the next resistance to be seen will be that area, 104.75, which also coincides with the 50-day moving average and the Bollinger Bars. So key resistance, strong resistance for dollar yen. Intraday now, so you can see that MACD is negative. I don't even need to explain that because it's been negative forever, actually since June. So clear the overall outlook remains negative. RSI is flirting with 50, but never didn't cross above it yet, and it's a bit of a narrow slope over here. It's touching it, never crossed yet. So key resistance to be seen will be that one, and it could retrace back down again if it doesn't manage to decisively break that level. Intraday fell short of the highs of the day, down, retested the 20-period moving average, trying to find some support, but remains well below the highs of the day. So if I put my 5 and 9 exponential moving average, you can see that we have some kind of a bearish crossover here. So we need to wait and see whether it will be confirmed before we say that it could turn back further down, or whether it will try to recover slightly. So overall negative outlook for dollar yen. Intraday negative as well, but we need to wait and see. Let me actually check the 30-minute chart. In the 30-minute chart, fast MAs point further to the downside, so there is some further steam. For the decline in the next few minutes, but keep an eye on that because the Bollingers have flattened. So we might see a little bit of a consolidation, so finding a floor. Let's move on to Aussie. Aussie has been one of the key movers today. A nice rally, actually. Nice rally since Asia session, since US session yesterday afternoon. Up, break the 0.75 level. That's actually, if you were like following us, you could see that we said that the 134, 130, 174, 173, 70 was a key resistance area of the asset, which if breaks could open the doors to the 2017 highs. So this is something that already broke today, okay, as the 20-day and 220 weeks and 200 weeks moving average is telling over here they point further to the upside. MACD is very, very positive. RSI pointing further to the upside. Stochastic is in the overbought territory. There is a lot of bullish pressure for Aussie dollar in the long term. This is a weekly chart, guys, okay? So you can see that it recovered full the 2019 and 20 losses in full, and is now, you should keep an eye on whether that move will be sustained. So if it sustains, we could see at some point in the near future, in the next few weeks, to reach back to 2017 highs. Now, what's going on to the Fibonacci level over here? Let me have a quick inverse Fibonacci to see where is our next support area. So, resistance area. So our next resistance area is at the extension of 127% at 0.7570. Okay. Intraday now, for those that are interested in the 1 hour chart, my fast MAs have flattened a bit. So with RSI turning slightly lower, stochastic, actually let me put stochastic again so you can see it. Can you see it? So stochastic cross bearish, it has a bearish crossover here, it points to the downside. So we see that the technical indicators are telling us that, you know what, the Aussie has overbought. It's time for a correction. So take care. Keep an eye on your technical indicators. Dollar CAD, big slap, and it was pretty much expected, I would say. And I'm glad for it because I mentioned it in several posts that I did. So, yeah, dollar CAD down to 127.35 territory, breaking the second resistance of the day, and that actually comes in line with the boost of oil, which reached more than $46, $46.50 more precisely. So in line with oil's appreciation. So dollar CAD down, dipped. Next support at 127.15, sorry, which is what we already mentioned in our post, guys. Because I had a post, I think it was last week, saying that the area that we should see next would be the 127 and later on the 124.60. That's why I had already that red line on. More precisely, what explains this, if you didn't kept an eye on dollar CAD earlier or the last few weeks and months and the oil, it was that why the dollar CAD was so heavy and remains so heavy is not solely the dollar weakness, okay, but also is because oil prices are maintaining some kind of a bullish stance, especially because oil supply is on the up. Libya supply is up. We had the OPEC Plus agreement already out of the way. So all these are actually supported a bit the dollar cut and the oil. Okay, but so actually they could support the dollar cut quite decisively in the oil, the OPEC extension, the fact that Libya supply continues, oil supply continues. Norway also announced a rise in output from year end. Also, we have also US President Biden stating that he will actually reduce and will lift sanction on Tehran, something that it means that we will see Iranian output increasing. So you can understand that there are factors that are negative for oil, and also positive for oil. So, and all this comes amid the increasing COVID-related restrictions and the European restrictions as well. So a lot of positives and negative factors that could drive the dollar cut for the time being. The reason why is like boosting further to the upside is actually on the optimism that vaccination program will boost the demand, and also on the Brexit situation as well. So this is something that also drove the Canadian dollar the last few days, because it actually presented some kind of a risk appetite. So for the now, big, this is a weekly candle, big bearish weekly candle last week. Let me get rid of the pivots just to clear it. So a break of the 127.30 barrier, which was a support back in March 2018, could open the doors to the 124.60 as a weekly chart. Now, intraday, it found some footing, it's oversold. Everything points to an oversold situation in dollar cut, so it needs a correction. That's why we've seen dollar cut down, MACD oversold, RSI oversold and trying to recover. So a bit of a rebound, as we can see. But as long as fast MA is pointing to the downside, momentum indicators are negative, and we have a bearish cross over here confirmed by the 50 and 20 moving average in the 1 hour chart that suggests that there is the overall outlook remains negative. And with this Fibonacci, you can see that as long as the asset doesn't turn back to 127.85 territory, then as long as it fails to break that barrier, then there is further steam to the downside for dollar CAD. Oil jumped 46.40, breaking the first resistance of the day. And actually, if we need to keep an eye on the high of the previous week at 47, that was 46.66. A break of it could open the doors further to the upside for oil, and more precisely up to the pre-pandemic levels. Okay, so if 66.66. What an ugly number. If 66.66 breaks, the next level to be watched will be the 52.40. 52.60, sorry. 52.60 territory. The 76.4 Fibonacci level, but also key support level for 2019 that now turns into a key resistance level for oil. Okay, even though for 2021 the appreciation of oil, it looks to be a bit limited. No questions. Oh my god, what's going on today? Have you went all to holidays? Let's have a gold. I might be one of the last ones that I will cover. So down, deep, recovered this week, but today is holding actually choppy, close to the 20-day moving average. Let's have a look on the 1-hour chart. So choppy in the Asian European session, but as soon as US, as soon as the inflation from US was out, with inflation out of US coming actually rising to 0.2% in November and showing a bit of an unchanged reading. But despite that, despite the in line with expectations inflation in US, we've seen that the gold actually jumped up, retested the pivot point of the day, but it didn't manage to sustain and move above it, so it's turning and get back. If you can see, the overall picture remains negative for gold. It's like moving lower and lower since the mid of 2020. Okay, so if I put a quick Fibonacci of that, as long as it doesn't manage to get back to at least 88.85, which is the 38.2 Fibonacci level, and above the support that we've seen the last 6 months, but a better number would be the around 1900s, but nevertheless, so as long as it doesn't, it fails to push above that barrier, then further negative bias is expected for gold. Intraday, as you can see, it failed to break the pivot point and is pulling back down again. Bitcoin slapped, turned back to 18,000. Second day below the 20-day moving average, and it looks that it has run out of steam up. Yeah, so a bit of uncertainty, a lot of uncertainty in the long term for Bitcoin. Let's see the intraday picture. Up overnight, down, reversing all the gains of yesterday. Support at 18,000, which is just a breath away from it. If that breaks, then it could retest. Yesterday's lows at 17,600 levels. So yeah, negative bias is like increasing over here. So we might see further steam to the downside, especially as long as this fast moving average are pointing to the downside and Bollingers are extending to the downside as well. So 1-hour chart is negative for Bitcoin. Guys, I don't have any questions. I don't know. You don't have any questions, it seems. So I am already live nearly an hour. I have covered all the major assets. I will finish with the S&P 500, and I call it a date. Okay, so last but not least is our stock markets, as always, our equities. So we have seen that as long as yields are getting richer, also the stocks are losing ground, and this is what happening over here. So today treasuries in US and in Europe are like losing, are getting richer, getting richer. That's why we've seen stocks losing momentum. So S&P 500 over here is down by nearly 0.5%, drifted lower. This is something that is going on since yesterday, so because of the stimulus as well. So the lack of the new stimulus agreement out of Washington and the lack of the breakthrough on Brexit and the ongoing surge in virus cases all weighted on sentiment, and they weighted significantly on US stocks as well, Nasdaq, S&P, Dow Jones, because yesterday we had as well a sizable and unanticipated jump in claims that has added to safe haven demand, something that along with the recall that the crushing of hope for stimulus big bill has actually drove the Wall Street down. This is what explains this big actually this huge drift on S&P 500 yesterday, and a continuation of it right now as the US opened already. So down, two bearish strong hourly candle the last hour, breaking the low, yesterday's lows, and not solely yesterday's lows, but actually breaking 5 days lows. So it turned further to the downside, and actually nearly ready to turn back nearly 30% of the gains that we have seen in December, since 20th of November. So Bollinger's turning lower, MACD also lower, posting another bearish crossover here. RSI flirting with 30. So RSI over here is having some kind of a rounding bottom, but there is a lot of aggressive selling because Bollinger's is extending lower. Fast MAs is pointing aggressively lower. 20 period moving average is also pointing lower. MACD is having a bearish cross. So everything suggests that sellers are in control. So the next support level to be seen will be, let me just quickly, will be this fractals over here, 3643. Let me have my pivot as well. So okay, that will be the very next immediate support level. If that fails, then is the confluence of the 50% Fibonacci and the second resistance of the day, which sit around 3630, 3628 territory. So keep an eye on that as well. So guys, I am running out of steam, so I will call it a date. So we had already out the inflation data from US that came better than expected. ECB is out of the way as well. ECB is out of the way. I'm not sure if the press conference finished. I think it did. And later on, we're expecting a US announcement in regards to the COVID vaccine from the US Food and Drug Administration. So keep an eye on that. But as I said, it was about the headlines, it's all about the news. Keep an eye on the vaccine development, keep an eye on the Brexit headlines, and so on and so forth. So let's summarize. Euro topped following the ECB's Lagarde press conference that there is a strengthening of PPP and TLTRO's program up to March 2022. Also, she said that she's watching closely the exchange rate developments and the associated impact on the medium-term inflation look. So this actually provides some kind of a bullish outlook for euro dollar to the upside. So strong euro against in comparison with dollar in 2021. Also, the ECB has raised euro strength concerns in the past. However, it remains to be seen if verbal intervention will much have a lasting impact. Stocks are losing momentum. Nasdaq, US stocks, European stocks are down. Gilt is the only exception. Bond is down. Yields are getting richer. In general, the US equity and the European equity future are weaker on the ongoing uncertainty over stimulus talks, as well on the lack of a new stimulus agreement, but also on the lack of breakthrough on Brexit. And as we have further surge in virus cases, especially in the US, this is something that I was watching earlier in Financial Times. Apparently, we had a spike again. Yeah, I saw it somewhere. I don't remember where it was. It was in Financial Times. So, as I was telling you, strong euro, weak dollar, weak pound, US stocks and US equity futures and European equities down on the lack of new stimulus in Washington, on the lack of breakthrough in Brexit, on the surging virus cases, that everything weighs on the sentiment. Gold under pressure, Bitcoin under pressure, yen under pressure, and I don't remember anything else. So yeah, that's pretty much it. Thank you very much for attending our webinar. Hope you're having a great day ahead. Take care, keep an eye on the headlines, and join us again tomorrow. Thank you very much for attending. Hope you're having a great day ahead, and see you later on. Bye-bye. Take care. Bye-bye.